everyone? All right, so we're gonna do June month in review. I'm a little late on getting this done. I was gonna do it earlier in the month, but I was sick and then went on this trip. So anyways, doing it now and going over the metrics for the month of June. Ended up being a good month, a green month, which is great. We're still in a bear market, and I will put a link right down below here for my, you can watch the replay of the class I taught a couple weeks ago, bear market strategies. So the strategy I'm trading right now is different from the strategy I traded 6 months ago or a year ago. I am adapting to current market conditions. I'm trading a bit more conservatively, and I'm trying to keep losses as small as possible and be aggressive only on days when there's some really nice momentum, when there's some nice opportunities. That worked fairly well for the month of June. I carried into the beginning of the month a little bit of a more aggressive stance on trading, continuing from May. I did have a bit of a 3-day red streak in May where I lost 25,000, made it back, traded aggressively in the beginning of June, and then came into another red streak where I lost 16,000. And so after that second kind of drop, I felt like I was basically back to pretty much where I was after the $25,000 loss from May. And I was like, you know what? I think I need to kind of buckle down here and just get settled into trading during the slow summer months a bit more conservatively. So now I've been doing that for, well, about a month, and the last month has been good. The last 2 weeks of June, small gains. The first 2 weeks of July, small gains. Relatively small green days, certainly very small red days, which is good. So profit, but kind of grinding on smaller numbers right now. And I think that's going to be the theme for the rest of July, and then probably for August as well. And then hopefully it'll be September, October, November, December, where we start to pick up for Q4. But a lot of that's going to be dependent on what happens with the overall market. We've got obviously the issues with inflation. We've got the Fed increasing interest rates to try to slow down demand and slow down the inflation of prices. So we have certainly a couple things going on there. And then there's the concern that the Fed's going to increase the interest rates and slow down growth so much that we're going to have a recession. It'll be an interesting recession because unemployment is still very, very low, which is different from other recessions where you have high unemployment and stuff like that. So anyways, it's interesting to see what's going to happen. This is a year that, every year is a little different. As a trader, we had incredible action in 2020, 2021, ultimate peak of bull market trading. And, in the 8 years that preceded that, which were also technically a bull market, I didn't do nearly as well as I did in 2020 and 2021. Those years were incredible. And now in 2022, with the market going basically into a bearish downtrend starting in the second week of January, now we're starting to, it's certainly slowing down, and there's less volatility in small cap names, and a lot of these small cap companies are more inclined to do these secondary offerings to raise money. So a little bit of a headwind right now, and doing the best I can just to grind on smaller numbers until things start to turn around. And I'm happy to, stay conservative for as long as it takes. Base hits is what it's about, and that served me pretty well in the month of June. So I hope you enjoy this review for the month of June. If you want to learn more about the bear market strategies I'm trading right now, you can check out the link down below in the description. We'll probably pin it to the comments, and I'll see you back here first thing for the morning show. All right, so I'll see you then. Hope you guys enjoy this episode. All right, so let's go ahead and jump in here. June month in review. I'll show you the broker statements first for the month. If you go over to warriortrading.com, down in the footer, you'll see broker statements from 2017, 18, 19, 20, 21, and 22. The reason I started in 2017 was because that's when I began a small account with $583.15. So from January 1st to February 6th, that was my first, that was starting with $583 day one. So these are those first statements from the very beginning of that account. Took that money out, put it into a regular US PDT account, continued to grow it. And for what it's worth, I do have all of the performance from that period of time audited, and this is the review here. So anyways, so that's why it starts in 2017, even though I have been trading for longer than that. That particular challenge of starting with $583, I wanted to do something a little bit unique, which was to show, the statements as I grew the account. So let's see. So we'll go back to 2022 here. All right, so finished the month of June with about $38,000 in profit. And on the broker statement page, the way I do it is I have my trader view report here, which is the high level metrics. And then I show you the two statements. One is a traditional trading account that has leverage and margin, and the other is a retirement account. This month I was actually down in my traditional margin account, 5,500. And so usually I don't trade in this account because it's taxable. But sometimes when I sit down, I'll take my first trade and not realize which account I'm in. And I usually only do that when I'm rushing. So these days where I was rushing, well, ended up costing me some money. The retirement account finished in great shape. I had $450,000 in the account at the beginning of the month, and I did two withdrawals, one of $550 at the first of the month. So started with 450 versus like $1 million. And then I did another $50,000 withdrawal around the 15th, which I used to set up my TD Ameritrade account, which has 50 grand in it now. So in any case, 58,000 in gross profit off of a $450,000 balance is not bad. Didn't really need that much money in the account to make this much. I'm not using the majority of my buying power at this point. But 43,000 in profit in the retirement account with one big red day and then a second smaller red day following it. So 3 red days for the month, it looks like. All right, so anyway, so it's helpful to see those numbers, but that doesn't really tell much of a story of the month. So that's where we're gonna get into Trader View here. So from January 1st to June 30th, January 1st, 2017, June 30th, 2022, just showing over $10 million in net profit after fees and commissions. But Trader View is always a little bit higher because there are some fees that do not get exported when you import your trades. So my actual net is just a little bit lower than that, but not a lot. All right, so let's go to June. Well, we can look at the year. So my net profit on the year right now is 392. What's kind of sad is that that's less than I made in one day last year. I had one day last year where I made $475,000. My results are not typical. There's no guarantee you'll find success. Take it slow. Okay, disclaimer. But so it's a little bit, it's a little sad in a way, but that's part of trading. And that's like, it's probably like a lot of different businesses. You might have a year or a day or a project or a client that's like a big payday, and then, you kind of go back to normal. So anyway, so this year though, what is notable is that my commissions have been quite high. So I've actually made $524,000 in gross profit, but 20% of that has gone to fees and commissions. I'm at $130,000 in fees and commissions. So that's quite high. And that's because this year there's been a lot of grinding. 2 steps forward, 2 steps back, 2 steps forward, 2 steps back. Not really having really opening up, having big green days, just kind of a lot of churn. Accuracy, 66%. Profit loss ratio is negative. Biggest winner is smaller than my biggest loser. So, this year has been a bit of a grind, and June wasn't really that much different. So let's see. So net profit here, 38,000. Profit loss ratio was fine, 1-to-1, but this was about a third of what my average winners are. My average winners are usually, what was it? We go for a longer period of time, 2020. Average winners typically 1,900. So, the average winners right now are about 25% as big. I'm trading with smaller size. If we went back here, let's see. Average daily volume, much higher. So I'm trading on about a third of the volume that I was, and I'm making a little less than a third. This is a market where we're in a bear market and it's slow. There's not as many opportunities. There's not as much volatility in small cap stocks, which is the area of the market that I focus on. And so, you could say, well, Ross, geez, your problem is your volume's too low. Just go back up to, whatever it was before, and that profit will go with it. And it wouldn't, because right now there's not enough liquidity in the market And there's not enough volatility really to support sizing up and scaling in. We're not seeing moves that are big enough. So what I've done is I've gone into bear market strategy. And the bear market strategy right now, which, again, reminder, there'll be a link right down below that you guys can check out. You can watch the replay of the bear market strategy class that I taught a couple weeks ago. The strategy I'm trading right now is adapting and adapted to this current market. And I am profitable even in a bear market, as you can see. I'm not making as much as I made in 2020 and 2021, but those 2 years were exceptionally crazy. And and even in bull markets prior to that, because we've been in a bull market really since like 2010, right? So I didn't have any year that was as good as 2020 and 21 in the 8 years of bull market that came before that. That was sort of the peak. And I'm glad that I capitalized on that opportunity well and put away some good profit. And now here we are in a bear market, and this is the best I've ever done in a bear market, and I'm pleased with that. But, you have to be able to adapt to market conditions. Otherwise, what's going to happen is you keep trading with big size, you keep trading aggressively, and you're going to lose money. And so one of the things that I mentioned, and so I'll say it again here, is that I mentioned this to Warrior members yesterday, I think it was. In a really strong market, and I'll go to full screen here. So in a really strong market, like in a bull market, you can have traders that can make money even if they're a little complacent. You could be a little sloppy and you could still make money, right? Because the market's just so forgiving because it's so strong. Things sell off, they go far down, and then they come back up. And so you can learn some bad habits. And those traders, when faced with a bear market, if they're not able to adapt, they'll keep doing what they've been doing and they will blow up their accounts. And that's what I think you've seen. You probably saw a lot of traders that came into the market in 2020, 2021 and made some money, and then they got knocked out of the market. Now, you may also have traders that came in 2020 and 2021 who lost money despite a bull market. And that just speaks to the fact that they didn't have strategy dialed in yet. So this right now is a good time to be practicing, because if you can do well in this type of bear market, I think that bodes really well for when the market picks back up, because the only way you do well right now is if you have a high degree of discipline. All right. So anyways, so this month, all things considered, the metrics are good. The biggest winner and the biggest loser were about the same size. Trade hold time 3 minutes and 4 minutes. That's all kind of typical. Accuracy at 64%, a little lower than I'd like, but not terrible. Profit loss ratio is good. Honestly, I just wish that the average winners and average losers were like 1,000, and I was up, 80,000 instead of 38. But I just didn't feel comfortable sizing up. And the reason that I traded a bit more conservatively here was, if we look at the calendar and we look at, go back to like April, I had this red stretch right here. This was like a $20,000, $25,000 kind of red stretch right there at the end of May. And that left me feeling pretty disappointed. I was not feeling really happy, sort of at the end of that. And so when I came into June, I was like, all right, you need to tighten it up. And I did. I traded really well for the first week, but then, once again, I had these two sort of big back-to-back red days. And, on those days, I was pretty upset. I felt like, man, look at this. You had 6 good days in a row, and now you've given back half of it in one day. 6 steps forward and then 3 back all in one day. And then there you go. There's the other 3 steps. Now you're back to flat on the month. So those 2 red days really hurt. And so coming out of that, I sort of said to myself, you know what? I think you need to really think about changing your approach here. It's going to be a long summer if you keep trading like this. Let's just dial it back. Let's bring the stress down. There's no sense in getting this worked up. And so at that point, I set a max share size of 10,000 shares on my account. I said, well, actually, first I set it at 6,000. And I was kind of a bit impulsive when I did that. I was sort of frustrated. And I was like, you know what? Max size 6,000 shares. I'm done trading big. I'm not even going to give it a chance to trade aggressively. But I think that was too tight. So then I bumped it up to 10,000. And so then I trade the rest of the month with a 10,000 share max position size. And you can see like these days here, $700, $300. I mean, these are very small green days. But the fact is that there weren't a lot of opportunities those last 2 weeks. This was a no trade day on the 22nd, another no trade day on the 24th. These could have just as easily been no trade days because there really wasn't a lot that was moving. And then, you come into July, and July has sort of been a continuation of what we've seen here this last week of June. The first week of July was really slow. I had, the first week of July was Friday the 1st, and then we had a holiday on Monday the 4th. I was sick on Tuesday the 5th. Green on Wednesday, Thursday, and Friday. I think it was just small gains. And then this week, small gains on Monday, 5,000 on Tuesday, down 1,700 Wednesday, down 1,300 today. So, these fortunately are small red days. But this kind of last 2 weeks of June is continuing into July, which is exactly what I expected. This is slow summer trading. None of this is really unusual. It's just important as a trader that you adapt to the market you're in, because one of the things that a lot of traders will do is they'll just get stubborn and they'll just get greedy and they'll say, well, I want to make $75,000 this month, so I'm just going to keep trading everything with 25,000 share positions. And this isn't the market to do that in. So you could do that, you'll lose money, and then at a certain point you'll realize you've got to get your head straight. And after having big losses, one of the only ways that you can really recenter yourself and get focused is to trade with small share size for a period of time. So I'm in a place right now where I'm being conservative, and I'm maybe being a little overly conservative. I'm probably missing some opportunities that otherwise I might have been able to make more on. But I just am not feeling super enthusiastic about being aggressive right now. And, I think that is going to probably be the case for the next couple months. And, the fact is, if I could keep averaging 35,000, a month, or 40,000 a month, that'd be fine. 10,000 a week. I'm totally okay with that. I don't feel that I need to be making, 200,000 a month every single month. I'm okay with it being a little bit slower. So I'm going to try to just kind of maintain this average through the rest of the summer, $30,000 to $50,000 a month. That, if I can get a couple of days each month where I have a nice $5,000 to $10,000 green day, that'll contribute nicely to the month. And the rest of the days, small gains, small losses, nothing big, keep it kind of mellow. I think that that's going to be the right approach for me going through the rest of July and then into August. And then when we come into September and then go into Q4, October, November, December, that's when things typically do pick back up. So that would be seasonally typical, and that's what I would expect. It depends to a certain extent on what happens with the overall market. The overall market being down this year and being in bear market territory is certainly weighing on small cap volatility. While there's a certain degree of volatility in some of the large cap names, and some traders have migrated over to trading large caps, I haven't seen enough volatility to really pique my interest yet. So I'm just kind of, camping out in the small cap area and making a little bit here and there and trying not to be too aggressive. So if we look at days and times, did the best Monday, Tuesday, Wednesday, Thursday, was red on Fridays, traded the best early, gave back profit at the opening range, and price and volume, we had a lot of momentum on low price names, which isn't really ideal for having a 10,000 share max size, because usually a low price stock like $2.50, $3, I'd be comfortable trading 30 or 40,000 shares, but I don't know. So anyways, a little tricky there. And let's see, win-loss expectation. So this shows those gains and then giving back almost all of it and then rallying back up, another red day, and then rallying back up to finish right here. So kept the drawdowns pretty minimal. 16,000 was the biggest drawdown. That's not too bad. And that's, that's kind of the month. So right now we're already halfway through July. It seems like kind of a continuation of what we saw the last 2 weeks of June. So that means it's been slow, not a lot of opportunities, but a few here and there. And biggest green day was Tuesday, where I finished at about 5,000 in gross profit. So, and the rest of the days have been smaller. And then I've had these 2 red days the last 2 days. So I'm just glad not to have $10,000 and $6,000 red days, $4,000 red days. So I'm gonna try to keep the red days as small as possible. I'm not afraid to have red days. I'll let a red day happen and just walk away, come back the next day, but try to keep those losses tight. And then on days when we see something actually moving and I feel confident, I'll try to trade a little longer and be a little bit more aggressive and try to squeeze as much as I can out of those opportunities, since they are a bit fewer and further between, and they probably will be for a bit longer. So anyways, a good time to be practicing in a simulator. Still a lot of opportunities to study level 2, gain experience there, and prepare for the next wave of momentum, whether it's a month away or a year away. Whenever it happens, you want to make sure you're ready. So that's it for me. I hope you've enjoyed this recap of June in review. And reminder, as always, trading is risky. My results are not typical, and there's no guarantee you'll find success. So make sure you take it slow.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.